All right. Yeah. Uh, Hi again, Kim. Thanks for joining me here. And um, and again, should I say congratulations on the global adoption report? I'm sure that it's still in the works, and it's the full report is not out until later, maybe in September, I believe. But you recently released the African part of the report, and we have questions. We did cover we did cover a little bit of it, the top figures, and to first say it confirms some of the things that we've been hearing on ground here over the past over the past over the past year, right? That a lot of volume has been moving to stable coins, right, away from. So it feels like the demand for trading, the demand for speculation is dying down locally. Is that what your data is saying, telling you as well?
In general, well, first of all, I'm really thank you for having us, but I'm more broadly, there is this strong underlying trend globally, not just in Africa, that people are migrating towards using stablecoins, and it's capturing more and more of market share. So of all of the activity that you see on all blockchains, more and more of it is happening in stablecoin denominated currencies, and this is a global phenomenon that's happening for a variety of reasons. But in addition to happening around the world, we do notice pockets of it throughout sub-Saharan Africa as well.
Lovely, yeah, and we asked earlier, and you gave us a figure. So, like the estimate of like stablecoin volume sent out of sub-Saharan Africa, because we see now that even though the chart doesn't make it very clear, right? Just how dominant stablecoin is, right? Because you have that stacked bar chart that just shows the distribution, and I'm curious to know if you can just give us like just in terms of percentage how dominant is stablecoin as in Africa?
It's over 50% of the total transaction volume, and that's about over $30 billion in estimated activity between the period studied, which was about a 12-month period between July 2022 and June 2023.
And just to be clear, that is value sent out of sub-Saharan Africa.
We don't know, we did not define the destination. So we don't know if it was leaving sub-Saharan Africa, but that's the amount of activity that was moving off of services the amount of estimated activity moving off of services with a large sub-Saharan African footprint. So, for example, for it to be leaving sub-Saharan Africa, we would need to know the counterparty, which we do know, and then subset that data to only look at funds leaving exchanges in the region to funds going to exchanges not in the region. But this is just all activity leaving sub-Saharan African exchanges.
Okay, great. And just to confirm also, because I want to lay this foundation, does this, value, so this includes both, value that remain in sub-Saharan Africa and some that are even leaving out the continent or the region. Is that correct?
Exactly. And I do just want to emphasize this is an estimate that is created from a methodology that Chainalysis is extremely transparent about. We have all of our methodology documentation available with the report that you can review. But this is, and I'm happy to go into more detail on the methodology, but this is our approach to estimating the amount of regional activity happening in pockets around the world.
And the one question, thanks for that, by the way. And one question that people have asked already, people that have seen our report, is does this include the P2P volume? Right now you have huge, a lot of activities happening off exchanges, right? So a lot of transaction happening off WhatsApp, and then people just transferring from, self-custodied wallets to another, just not touching like your Binance or Luno or just any other exchange. Does it include this volume? Does it include that P2P volume?
The methodology applies to services. And so, if you understand peer-to-peer activity to be cell phone to cell phone activity, then we don't capture that. the way our methodology works is we look at the web traffic going to known identified services. So, for example, Luno, and we can see that X% of Luno's total web traffic is in South Africa. And then we discount the total volumes happening on that exchange by the web traffic shares. Now, indirectly, we are actually capturing those peer to peer transfers, because if you're someone who sources your funds from an exchange, and then that kind of gets distributed through your network of friends, then we are capturing those funds getting sourced by the original kind of person who is initiating the peer-to-peer transactions. However, we're not capturing every single phone-to-phone transaction in here, because Chainalysis focuses on identifying services, not individuals, and those phone-to-phone transactions are individual wallets. Plus, our methodology would preclude that as well, because there's no URL, so we wouldn't know the web traffic going to those individual wallets.
All right, great. The reason I wanted to ask is there has been this, this theory that um, stablecoin is becoming, used as a tool for trade, cross-border trade in Sub-Saharan Africa. There was a data we saw earlier in the year where that says that uh, I think a lot of, I can't remember the figure now, but just in the billions of dollars, up to like 30 billion, if I believe, in stablecoin value or crypto value that is transferred out of Africa, Sub-Saharan Africa, and goes to East Asia, right? And I mean, East Asia, we have China, we have I think Taiwan, and a lot of trade partners of countries in the African region, and it just makes sense to us to like believe that okay, people actually, and whispers also, like people actually using stablecoin for cross-border trade. Is that something you see in your data at all?
Our data is extremely comprehensive. We know every single transaction happening and every counterparty and every size of every transaction, but we can't ask the intention behind the transactions happening. So if we see funds going from, let's say, Luno to Coinbase, we can't go into that account and say, "Hey, why did you do that transfer? Was it a remittance? What were you? Are you running a commercial enterprise? What's going on there?" With
Right.
crime data, it's extremely easy to figure out what's going on when funds get sent to a darknet market, for example. It's pretty easy to deduce that, hey, that person's probably buying drugs or illicit goods. But when most of the activity is happening on exchanges, and there's so much variety of types of actions that can be occurring, it's hard to really pinpoint what is the distribution of different actions happening with those transactions. One method that we do employ is looking at the transfer size. We can see that, excuse me, we can see that, for example, what percentage of funds leaving South or Sub-Saharan African exchanges are less than $100, or between $100 and $1,000, or more than $1 million, more
Yeah.
than $10 million. And that allows us to say, okay, maybe these larger transfers are more institutional or more commercial. The smaller ones might be more individual, but we still can't ask the intention behind those transactions. So Chainalysis relies heavily on interviews during this process, talking to people who are living in the region. We talked to a lot of people in Nigeria and South Africa and said, how do you use crypto? What can you tell us? And from there, we learned that there are people who are doing a lot of commercial business. We talked to people who are importing goods from, as you said, China, who are setting up remittance shops or for to distribute payments to receive payments from all around the world. And we heard anecdotes that are capturing a lot of different types of use cases, but that you can't really go from anecdotes to a broader methodology. Unfortunately, I wish you could.
All right, fair enough. And I'll just ask you a little bit about that institutional involvement of volume that you mentioned. Just before that, though, there is, I mean, your report or the blog you published opened with the line. Uh, uh, Similar to previous years, Sub-Saharan Africa has the smallest crypto economy of all regions, accounting for just 2.3% of global transaction volume between July 2022 and June 2023. And that I want to talk a little bit about that 2.3%. Yeah. Uh, and we asked that question earlier, just how that is very tiny. Yeah. Just how much do you think the lack of regulatory clarity in many African countries, sub-Saharan African countries, has to do with that? Because then, if more, so when you think about the Western countries, for example, uh, uh, crypto companies are able to deal with financial institutions in some big economies, right? And that makes it easy to, like, have institutional involvement. So do you think that is reflective? That tiny representation is reflective of the dearth of institutional involvement in Africa.
We can certainly say that the lack of clear regulatory frameworks can inhibit not only, adoption more broadly, but one I want to bring some, so yes, there is that point there. Good regulatory clarity brings more people comfortably into the space. But I do want to point something out. Even though Sub-Saharan Africa accounts for 2.3% of total activity, many of the countries within Sub-Saharan Africa are actually in the top of our index, because when you wait for things like purchasing power, GDP, and population, there are pockets that are really popping out, that when you wait for those economic variables, really put them into the world of being top adopters. Not every country is different. One thing that I've learned from this report is that every single country you could do a dissertation on why crypto adoption is at a PhD dissertation on why crypto adoption is exactly the way it is. And you could even get more granular than that. And you could talk about regulations, you could talk about currency devaluation, you could talk about the social, cultural, political things that are all impacting, and those are all different from country to country. But if we have to generalize, which we do, then we can see little pockets of, like, so we saw Nigeria, Kenya is a big adopter, and so those, when you wait for those economic variables, they start to really pop.
Yeah, that makes sense. And I'll just move a little bit to. I want to ask about Nigeria because, like I mentioned earlier, there is skepticism. People saying, how is it possible that Nigeria received nearly to 60 billion? I think it's about $56.7 billion, if I'm being exact, and people want to, like, know how is that possible, and I think there are, like, some local context that needs to be highlighted here. You have so I wanted, when you say value received, maybe we can start by understanding when you say value received by, because the report says that the value received by sub-Saharan Africa between the studied period is $117.1 billion. So how do you define value received?
That's the amount coming into services, the amount of the blockchain settled transactions arriving at services with a geographic footprint in sub-Saharan Africa. So, for example, if Luno, we were talking about Luno a lot, if we'll keep that going, if Luno received $100 billion in crypto transfers, then that's the value received. And then we use our web traffic methodology, and yeah, people I have a lot of different reactions to our data. Some say, oh, it's way too small. Some say, oh, it's way too big. Crypto is extremely outlier dependent, and there are some really, really big players in the market. We'll see one $700 million transfer happening pretty frequently. And so these volumes can get really blown up by outlier large institutional activity, which are could just be people transferring funds to a more secure wallet. So you have to appreciate that these are estimates, and in countries where you might feel like the estimate is too high, or some smaller countries with less of an institutional market might have the figures might be slightly inflated, because we are capturing a share of those large institutional transfers. So a lot of activity in Nigeria, for example, happens on Binance, and Binance has a large institutional presence, so a lot of really extremely large transfers. And so our web traffic methodology works in such a way where it's capturing a part of that institutional activity because of the way we use shares to discount the total activity on Binance and capture some of the Binance activity and put it in Nigeria. And so I would say that some are inflated up and some are inflated down. But so it's important to understand that this is an estimate. I would say directionally, we're very confident that Nigeria is by far the largest crypto market,
Yeah.
and we like to emphasize the caveats of our methodology. And but likewise, what number would feel right? Is it 30 billion? Is it 10 billion? Is it 100 billion? So at a certain point, your feelings about what the number is kind of only go so far.
Yeah, so it's I don't think it's so much about the feeling. It's because of understanding the local context. And I'll tell you this for a fact that sub-Saharan Africa countries are different in terms of behavior than a lot of Western countries. And one of the things that we know, so there is this trading kind of this type of trading that people do, P2P trading, and I'm sure you're aware that P2P trading is kind of dominant on the continent here. So people trying to benefit from that spread. So from just looking at one platform to the other, just between your USDT and Naira spread, and your US on one platform to the other, sometimes you can have like about 5 Naira on the dollar for every dollar, right? And then what I've learned is that some people buy low on some platforms and then move to other platforms to sell, and that creates some sort of round tripping, if you understand what I'm trying to say. And I'm just curious to know if all of this is factored in and into this. I don't know. I don't have a figure just for how big that kind of market is, but I don't think it's tiny either.
It's We don't factor that specifically in because that is just by default captured using our generic geography methodology. Could we factor it in? If you can describe a pattern that you want to capture, then you absolutely can capture it with blockchain and analytics, because like we said, every single transaction is available. So if there are typical behaviors that these traders are conforming to, specifically in sub-Saharan Africa, where you might see deposit addresses going in a wallet using two exchanges, and you can see there's a time dimension, so they receive from one exchange and send to another exchange, then you absolutely can capture that. My understanding, though, is that that's not actually how cross exchange arbitrage works. I think that the way it works is um, people have funds on both exchanges and don't actually take funds actively off of one, move it to a wallet, and then send it to another exchange, because you're gonna be paying a lot of transaction fees. Rather you have pots of funds on both exchanges and you're just kind of buying and selling on the order books. And then that would not be captured because that is a different type of data. I know we're getting really nuanced about the data. The differences between order book data and blockchain data is something that I have to do a lot of work to really ensure that people understand the difference. And I don't think we'll have enough time to go into it here, but they are
Yeah.
different sets of data, and it has to do with centralization, basically, of how services choose to organize their data. And so I think that maybe the direction we went is very like kind of nuanced and niche. But I think the key takeaway is if there is a pattern that people are conforming to on the blockchain, then we are able to write algorithms to identify those patterns and then subset out the network to look at just that activity.
Yeah, lovely. And just as an aside, right? I feel like as the market gets bigger in sub-Saharan Africa, you may need someone on ground to just help understand this data differently and just like give like that local understanding of what is happening. But just one other thing that I wanted to like ask, right? It's uh, a little bit about Mauritius, right? And I think it's the first time that you're sharing that you have like that chart of that shows like which a bar chart of the countries, the volume by country. And from what I see, Mauritius is number 4. and that is a surprise for me. Is that something that it has? Is that something new, or it's been like that for a while?
I'm actually not familiar with where its ranking has been.
Yeah.
Um, over the years. I actually don't, I'm just going to speculate now, but I don't recall it being in top of the rankings actually in previous years. Um, so, but again, we could check past years, but this index does tend to capture new market entrants and maybe little hotspots in new countries that weren't existing before. And so it very well could be. I think 2 years ago we saw Togo all of a sudden was kind of towards the top of the index, and so we did it went on a huge. We were really trying to figure that out, and it was hard to pair that activity with anecdotal evidence because there wasn't a lot of news about it, and so then you kind of it leads to maybe sending an investigative journalist down there, and then they'll start to discover little communities and networks and Facebook pages and Telegram groups and whatnot. Crypto really does grow in a network way. So there's spillover effects. So one person will bring it to a friend, and then those friends bring it to other friends. And so it has this really strong organic grassroots growth, particularly in regions like Sub-Saharan Africa, where we've seen just steady, consistent growth over the years, which makes it less of kind of like a really awesome headline story. Oh, consistent growth in Sub-Saharan Africa. People like to hear about $600 million hacks, but um it's definitely something that we're not surprised by when we see new countries kind of work their way up on the index.
All right. Yeah, I'm not sure this data that I'm sharing is it's very clear, but I'm going to try to zoom in a little bit here. And so we just did a little chart there of value received for your data for over the last 4 years, and it's interesting to see how it picked up from about $8 billion between 2019 and 2020, and then of course and but what we have last year or this year is the highest ever. And I found it interesting because everybody would have thought that given the market condition that it would be the worst, it will be the worst performing year. Is there something you want to say about that? Is it is it a reflection of a consolidated region that okay, we understand what crypto is, we understand the market cycle, and what can you say about it? Because I found that surprising.
I think that I'm seeing an issue with the chart, which is that if you grabbed data from that report 3 years ago, and you is that where this came from? Did you just download the report from 3 years ago?
Yes,
And
yes, yes. That's
so
what we did.
those numbers, the way Chainalysis works is we have a team of hundreds of people that are looking to identify services. So because of that, our data set is constantly growing. And so our data set today is orders of magnitude larger than our data set a few years ago. And so if we find a new service, we get an understanding of that service retroactively. So we know what happened historically on that service. So actually, are likely, if you were to, and I'm happy to actually provide this for you, likely the 2020 to 2021 data would actually be significantly higher at this point, given the new information that we've learned, the new services. There's a lot of services that we are freshly identifying, and we're getting new blockchains is another big thing. So back in 2020 we didn't have as many blockchains as we have today. So our data set's growing, and so I would not compare the data from the last reports to this report. Rather, I would reach out to us and ask us to recalculate those previous figures.
Uh, I think that makes sense given the fact that given how you capture the data to start with. So yes, so that makes a lot of sense. But in terms of altcoins, and I think we're curious to know if there is any specific altcoin that you found to be popular in this region, and just how much in terms you said over 50% was stablecoin, and just how much of the volume around here was altcoin.
I think like I have to, I'm not sure actually what example of a popular stablecoin or a popular altcoin was. I'm sure the interesting thing about altcoins is there are millions launched every year. And some become popular in some parts of the world, some become popular everywhere, and then some crash and burn. And so I don't actually have a strong sense of which ones really resonated last year, but I do know in the conversations that I had with people, we heard a lot about Tether, and we heard a lot about um, how Bitcoin and Tether. Alts are a big part of the story for people who are really deep in crypto and want to get exposure to a lot of different altcoins in addition to kind of mainstream altcoins like Litecoin and Bitcoin Cash and whatnot. But by and large, we this what we heard was stablecoins and Bitcoin.
All right. Okay. Fair enough. And please, I think we're going to reach out to you for some data. Just if you could provide that to us.
Absolutely, please.
Yeah. And just finally, and I'll let you go be on your way, please. And I think this has to do with uh, just understanding if you have information on which region. Do you have data on which region? Money moved out of Africa, right? Is that something you have data on? We're just curious to know if you have information on which region received most value from which of the region you study received most value from sub-Saharan Africa.
We did not calculate that this year
Okay.
because of limitations due to our methodology. Anecdotally, we heard China. Anecdotally, we heard remittances in Europe. Anecdotally, we heard cross-border payments within sub-Saharan Africa itself. But we did not put numbers behind that this year. We have in the past. I think that people like to interpret those figures as that is a flow from China to sub-Saharan Africa or to Nigeria. And that is not what it is. This is an estimate based on the types of services because for example, there's Binance, but Binance is used all around the world.
Right.
So there's a few services that have a strong regional footprint, but crypto is a global asset, and exchanges are international in nature. And so if we lived in a world where exchanges were very region specific, then this would be possible. But we have this issue where most people gravitate towards these international services. But that being said, um, the anecdotal information is pretty strong, and I think that this problem is not unique to crypto of identifying kind of gray market flows. So there's this whole concept of gray markets around the world. So things that happen maybe slightly outside of the world of what's regulated, and those are no one has a sense of how much of that, how the size of that in the fiat world. So these are challenges that are familiar and that regulators are well aware of, and that we kind of do our best to try and estimate through a variety of methods.
All right. Yeah, that makes a lot of sense. And thank you so much for your time. And I'll just, if you have, just something you want to say, something you want to tell us, maybe you expected that I will ask that, but I didn't.
I just download the report and I think one thing is that we have meaningful crypto activity in almost every country around the world, and this is a truly global asset. This is an asset that is pretty unstoppable, and each country, each region has a different story. that is impacting the growth and adoption. I mean, there are similarities, but it's a fascinating asset to and how it solves different issues that different regions and countries face. It might solve uh, difficulty with obtaining a stable store of value. It might solve policy or capital control issues. It might solve for entertainment. And so you see the same type of assets solving different issues all around the world, which is really cool.
All right, lovely. And I think I just saw that Mauritius was number 122 last year, right? And I think that is on the global index. Looking forward to seeing where it comes in this year when the full report is out. Uh, I think that just piques my interest, and I was curious about that because I'm always where we at Mariblock we're interested in seeing just how regulatory clarity is driving attitude towards crypto, who is getting involved, uh, and so of course volume would be one of those things. One of the things that we're looking at is uh, hiring activities, right? Do we see? So that's something we're tracking currently in South Africa. Who is hiring for blockchain and cryptocurrency roles? Yeah, and we're just interested to see if there was anything that could point us, just to like see our regulatory activity. We know it helps, but it helps to just have that quantitative information alongside it.
Yeah, we should definitely do a Mauritius deep dive profile, a feature piece. So reach out and we're happy to provide you with the data.
Awesome, awesome. Thank you so much for your time. Thanks for and good luck with the report.
Thank
When,
you so
when
much
can
for
we
having me.
when can we expect the full report out?
The full report should be out in mid October, actually, mid October.
Looking forward to it. Can't wait to dive in.
Thank you so much.
All right, thank you. Yeah,
Bye.
bye bye.